Hello and welcome to today's video where we're going to talk about education loans. How to choose them, what are the different steps to follow to research and find the right lenders, and what are some parameters you need to consider when finalizing the right education loan provider. Those are some of the things we'll be diving in today, so let's check it out. Before we dive right in case you haven't heard of us, we are Yocket, India's largest study abroad platform with free tools, expert resources, and the biggest study abroad community you can find. And in the same community spirit, I want you to let us know in the comments below what intake are you applying for and what the biggest question regarding studying abroad is on your mind. In this video, of course, we will be tackling education loans, so let's check it right out. Step 1. Researching the different types of loans and lenders. There are two main types of education loans. The first one are secured education loans, which are backed by collateral. This could be your property, investments, or any other assets that you may have. Since the loan is backed by property, the lender's risk is lower, thereby giving you lower interest rates, longer repayment periods, and higher loan amounts as compared to the second type, which are unsecured loans. As the name suggests, unsecured education loans are not backed by any collateral and instead given to you by the lender on the basis of your credit history, income, and other such factors. Obviously, since the risk is higher on the lender's side, you usually get higher interest rates and shorter repayment periods with this type of loan as compared to secured loans. Apart from collateral, the other important point to note is the presence of a co-applicant, co-signer, or a co-borrower. All of these terms mean the same to say that they share the responsibility of paying the loan back on time. So their income amount, source of income, age, and other such factors may also be relevant when it comes to finding an education loan. Once you know what type of loan you're looking for, the next step is to finalize a few lenders. For this, you need to understand the different types of lenders that are available in the market. First one are banks. They are the most popular choice, as you may know, that students opt for in terms of education loans. They offer a host of benefits such as competitive interest rates, longer repayment periods, flexible repayment terms, as well as a moratorium period where students do not have to pay back the loan until after they've completed their studies. Obviously, these banks can be divided into two main sectors: government banks such as State Bank of India, Canara Bank, Punjab National Bank, etc., or private banks like HDFC Bank, Axis Bank, etc. Next, you have non-banking financial companies or NBFCs. These are institutions that offer loans and other types of financial products but are not licensed as banks. They also offer education loans just like banks do, but may have less strict eligibility criteria in terms of providing the loan. Some popular examples are Credila, Avance, Incred, Oxilo, etc. Finally, the least popular method are government schemes, and there are plenty of examples on your screen right now. Moving on to step 2, which is to compare interest rates and processing fees. As you might be aware, interest rates are the percentage that the lender charges for borrowing the loan amount. This typically ranges from 8.5% all the way up to 16%, depending on the type of loan, the type of lender, as well as your personal credit history. Regarding processing fees, government banks will usually charge a fixed processing fee, whereas NBFCs and private banks charge a certain percentage of the loan amount, something like 0.9 to 2% of the final loan amount. It goes without saying that you want to choose lenders that offer the lowest possible interest rates and processing fees, as well as cover as much of the loan amount as you are looking for. Yocket pro tip. Rather than spending your valuable time doing this manually, you can sign up for Yocket's financial assistance, where we help you compare loan options from up to 10 plus partners and help you get the highest loan amount at the best interest rates possible, completely free of charge. Till date, we've supported over 5,000 plus students in their journey to finding the best loans. And fun fact, our fastest loan sanction was completed within just 2 days. So I'm sharing the link in the description in case you're looking for such a service. Check it out and let us know what you think. Step 3, understand your repayment options clearly. It's important to clearly understand the loan's terms and conditions, such as the repayment period, the repayment terms, as well as any fees or penalties for prepayment or default. Some lenders may allow you to defer payments until after you graduate, while others may allow you to make interest-only payments while you're studying. Finally, step 4, check the reputation of the lender. Before signing off the loan, make sure to go through the reputation of the lender by reading reviews online, asking other alumni, seniors, friends who have also taken similar education loan options. Finally, before we wrap up, some frequently asked questions for you to consider. Number 1. How do you decide the education loan amount? Your loan amount depends on your overall cost, which includes your tuition, other fees, travel costs, living expenses, etc. So while deciding your final loan amount, you also have to take into consideration any other sources of funding that you may have, such as personal finances, loans from friends and family, etc. Number 2. What documents do you need to apply for an education loan? Of course, different lenders may have different exact requirements, but the baseline usually tends to be proof of admission, mark sheets, proof of income, identity proof, address proof, among many other documents. Number 3. When is the right time to apply for an education loan? This is a tricky one because while lenders require proof of admission, universities may require proof of funds in order to grant you an admit. So here it depends on the lender that you're choosing. Some lenders may start processing your application only once you have a confirmed admission letter, while others may allow you to start with just a proof of application, while many more may allow you to start even without either of these two documents. It also varies depending on your individual financial circumstances, so the best method is to consult a financial advisor for this. And lastly, what is the eligibility criteria for education loans? Again, every lender has their own eligibility criteria. It also varies on your personal financial circumstance and the type of loan you're looking for, but a general list of eligibility criteria is now visible on your screen. That's all from us in today's video. We hope this was a great start to your understanding of education loans. If you have any more questions, please share them in the comments below. We will make subsequent videos on this series if there are enough people who are interested. As always, if you found this content useful and you feel there may be other students who may benefit from this, please like the video and subscribe so that they may also see this video in their personal feeds. But that's all from us in today's video. Until I see you next time, this is Shruti signing off. Ta-da!